Welcome back to Treasury Talks number 13. We got Avi here with us. We got Brian here with us. Today's a little bit of a painful day. We were chatting it up in our Ben Bitcoin meetup last night about what's going to happen next. And there was only a few people there bearish, and they ended up being right today. So I'm going to kick it off with Avi is going to start with a clip from midweek markets or live stream yesterday that we actually think is relevant.
So, yeah, if you guys didn't join us yesterday, we do our midweek markets, the one show that 21 Rates does that is inclusive of some stocks in the broader markets. And we brought our boy KT on. So I'll run the clip here, but he is one of the best options traders, and he reads Bitcoin as well. And so let's start with that clip. And the prediction hopefully is not true, but it's looking that direction.
What is your Bitcoin line in the sand? I think we hit like an 84, 82 on like a candle as the previous low, like within the last 2 months. What are your thoughts on what the bounce would be, or is the low already in for the 2025?
I mean, the line in the sand, yeah, I think, like 85,500 is definitely something that I don't want to break. If that kind of breaks, we are going all the way to 74 to 70. So I don't want the 85,500 to break. But like I said,
yeah,
I'm not really looking to, play the downside on Bitcoin. I am looking for, like, if you already own Bitcoin, just keep it for life, right? Like,
what is your Bitcoin line in the sand? I think we hit like an 80.
We don't need to watch it twice there, but yeah, you heard it from the man himself. Jody, if you want to switch back, there we go. Yeah, so we went under. Again, we were just talking here before the show though, and saying, if you're in a Bitcoin for the long haul here, it's not, you're not looking at the day to day, and it's going to go up and down. I just know 5 years from now, I feel very comfortable that it's going to continue. But for the traders out there, that was pretty accurate exactly so far. Let's see where it goes.
Yeah, I think, it's interesting too that the number that was on the screen when he was saying that was only 85,800 or something like that. So it was like a $300 difference, which is nothing for Bitcoin. So if like that was the actual line in the sand, and I don't want to, put words in his mouth. I don't know that he was like saying that that's my absolute, but like he gave you a number that he started, would have some concern over. And, when we started talking here, a few minutes ago, behind the scenes in the green room, we were at like 84, 600 or something, and now we're above 85. Like it moves around. Like this is daily movement for Bitcoin. So like being this close to it, I don't know that I'd say that like we're going further down. But to the point you were making, Avi, 5 years from now, am I worried about like if I bought in the 80s or the 70s, if I'm DCAing in, or if I'm holding from any of the cost basis points that we had this year? Probably not, right? So I think a lot of us spend a lot of time in the ecosystem, but we also have to remember that like, why did we get interested in Bitcoin in the first place? If it's just number go up technology, then we should be looking at how to get in and out of it well. But for most of us, I don't think it is, especially those of us who've talked, treasury companies and all the people we've interviewed, over the course of this show. It's much more of an asset that we kind of think of as buy and hold, or something that we're going to be in for a longer term period of time.
Do you think the 4 year cycle, I mean, if it gets down to 70 or even below 70, the 4 year cycle is kind of back then in a sense, right? Because from the highs, it's gone down 60, close to 60%, or?
Yeah, I mean, but everything. It's funny. I was watching a debate between two people, and I won't mention what it was yesterday. And one person's using all these charts over here, and then the other person would like point to data, and it's just like, well, you've only got 3 data points there, and like I'm like, the chart that you were showing to support your thing only had 3 data points in it as well. It's like he's talking macro charts and like doing whatever it is, and then this person over here is using a chart that has 3 data points in it as well. And things work until they don't, but we like stories. We like to fit things into boxes because it's the frameworks that we were taught to think within. To think that we are in the same 4 year cycle that we were previously is not necessarily like, I don't think it's a healthy thing for us to try to put Bitcoin in that box, right? We didn't have ETFs. We didn't have the treasury companies buying. A lot of the people who have held for a long time, have made, significant generational wealth beyond their wildest dreams. So are they going to change their lifestyles at this point? Like, it seems like there's a floor that they could, know on Bitcoin, that it's not going to go down by more than probably half or 60% instead of the, 70 or 80% drawdowns that we had before. It's different, even if we do have these sort of 4-year cycles, and you talk to different people, it's 3 years and 11 months, right? It's really, corresponding to this liquidity cycle that has hit a whole bunch of these different years or whatever it is. Everybody's trying to fit a narrative that they sort of feel like they found. But, we were all together a few months ago, and we would not have guessed that Bitcoin would have gone to 126 and then down to 85. Like, we would have probably all put money against that when we were last together in August. Like, we might have said it'd go down to 85 from where it was, but not necessarily after setting a new all-time high after that. So, people who've been in this much longer than me have said Bitcoin's going to do what Bitcoin's going to do, and it's going to surprise everybody, right? So, people are expecting it to go down more. We've had this like chop in the 80s for months now, right? People are expected to go up much higher, and maybe that'll come, maybe it won't. So, in the long run, I think it's directionally higher, right? That's what we all kind of think.
Yeah. I was just going to ask if you mentioned there's a certain number you'll back up the truck, and it's very easy to say that. There's so many times I've said that, and then you're just like, oh shit, this is really dropping. Like, is there a line in the sand for you? I think you said 60K. I could be wrong though. But like, is there a number in mind that you're like, I don't care. Like, maybe it does drop a little below, but at 60K or whatever your number is, you're going to be backing up the truck, as you said.
Yeah, and I think we'll probably get to this later in the conversation with one of the topics, but I've tried to take the emotion out of my DCA, because it feels like, oh, I have money, I should put more in. Oh, it's cheap, I should put more in, and there's different points with that. Instead, what I've tried to do is say, what are the metrics that I can look at, and basically put values on to say, this is how much I want to DCA in at this moment in time. So if we're hitting an all-time high and none of the metrics are firing, I'm probably just DCAing in a little bit, right? And if a lot of the metrics are firing, like all of the different things at a high weighting, because it's like the bottom, that we saw at different points in time in the past, that I want to basically be putting in a lot of money at that point. But I want it to be mechanical, because if you read about investing, and you read about investor psychology, like there's a whole behavioral economics topic around this. Like, we're our own worst enemies with that. Like, the best performing like people at Vanguard are the ones who were dead. So that like they didn't touch their portfolios or whatever, right? So you have to take your emotion out of it. And do I know that I'm not going to play with my formula in the next few months? No. Do I know that I'm absolutely going to follow it to a T? No. But I'm going to try. And so, Bitcoin doesn't really get concerning to me unless it probably goes down below the 200-week moving average. And then I'd say, why is it there, right? Did quantum break Satoshi's wallet if those coins move all at once, especially, right? And it was driving the price down? Maybe there's something broken with Bitcoin or whatever it was. Like, Satoshi's gift is that he hasn't, consolidated the beginning of this, but like if Satoshi's gift moves, like all those coins move all at once, and sort of liquidate, that could be something very, very different. And I think we all sort of take for granted that it won't. And I'm not saying that it will. I'm not trying to be like, speculative on that. It's just, those are the types of things that you'd have existential crises along with a significant price reduction. But if it's just a significant price reduction, sort of that beach ball thing, and, it's a $2 trillion asset. Like Wall Street's got that in the pocket change in its car if it wants to work together to short something, and it's liquid, right, with Bitcoin. So
I was laughing. Go ahead.
To buying the dip from that. I think, Brian, obviously what you're saying is how we want people to approach Bitcoin is being long-term focused, buy and hold. This is like resistance money. It's your store of value. Most people do not trade well. Most gamblers do not make money coming out of this casino at all. I think when we talk about buying the dip, I think it's good for people that have more of a trading mindset. Like it's people are wired that way. You want to do better faster. That's why altcoins have so much liquidity and people invest in these things. People want to, get that 10 or 100x. So what we were talking about last night at our like local like Bitcoin meetup is I think it's good to talk about the trading side to show people, you know, let's say 85 looks cheap, you know, in your head. Oh, 85,500 is cheap, or 85,500 was a line in the sand and it goes down to 85. Well, like it can still go down to 70, you know, so like not, you know, knowing how far things can fall and, you know, seeing someone like, you know, Problem Sniper at KT yesterday, seeing, you know, he's looking at the markets all day and has for years and this, you know, runs a business doing that. I think it's good to show people, look, like things can keep going. Don't catch a falling knife. Don't try to buy immediately like once something drops 500, because if it could keep dropping 5,000, like just be very cautious in DCA and go in. Another guy in the meetup actually mentioned last night, there was one guy, I can't remember who was talking about, but there was a guy on a podcast that was talking about take, you know, 10% of your stack, 10%, and in a very safe way. If you have the itch to like buy or sell often, then trade. Just use 10% to trade. And like, if you do well, great. If you don't, you learned your lesson that you don't know anything and you can't time the market. And then that way, the other 90% is never touched with Bitcoin. So we don't necessarily condone, you know, active trading. There's so much that goes into it, and you're probably going to lose your money. But if you have the itch to do it, and you feel like you have to sell out like cold storage, just take 10%, put it into, you know, try out some strategies. Go follow someone like Problem Sniper, and learn your lessons that way, the hard way.
Yeah, don't.
And that's. Sorry, it's good advice, and really that goes back to basic personal finance advice. And I've been reading personal finance stuff for, you know, the better part of 25 years since I was a teenager. You know, my father would get Money Magazine or something like that, and I'd actually read it as a teenager at 14, and I was the weird one. But, you know, what a lot of people will say is, you know, put money into index funds, you know, take it out of your paycheck. It's automatic deposits. You're buying when it's low, you're buying when it's high. You're not varying the amount. You're taking the emotion out of it. And if you need to trade, they recommend 5 or 10% of what you have. Same thing that this Bitcoiner was, you know, talking about. So that's TradFi. Like that's the same thing for, you know, you go to Bogleheads or index investors, they're going to tell you you're just going to lose. But if you want to, great. The other side of that is we have so much difficulty just even on a day like today, thinking about, do we back up the truck? How much do we buy? How much of our like dry powder do we actually use for, you know, buys today versus like waiting? Like how many people like put all of their dry powder in when we first hit 85 and it's been there for a month, right? And you could get it at 84 and 83 at different points in time in the last month or two. That's the easy part, actually, the buy decisions. And if you look at the behavioral psychology stuff, the harder decisions when you're trading is selling 100% of the time. Like, is it going to continue to go up? Am I selling the top? Am I selling too early? Has it already peaked? You know, now it's down. Am I going to sell now at a loss? And, you know, or do I wait for it to come back up? And I think that, you know, that's probably something that we'll get into a little bit later as we talk more about treasury companies. But, you know, for most people, probably they shouldn't be trading Bitcoin. Like this, people sometimes look at Bitcoin number go up investment, but that's because we needed investment to, you know, avoid debasement and inflation, basically. Like that was stripping out the value of money that we would just put in the bank. Even if the bank wasn't paying us interest, the money was getting devalued. So we needed to do something. So we all had to become traders after becoming, you know, butchers or, you know, software sellers or, you know, lawyers or doctors or whatever the heck else we were doing. We had to have a side hustle just to invest so we didn't lose the money over time. And Bitcoin just allows you to, you put the money in and you forget about it. And if you leave it there for 4 years, what you put in is worth more than it was 4 years before. And that rule hasn't been violated yet, I don't believe. And I don't think that there's anything indicating that it will, but it becomes that savings technology instead. So, you know, for me, I like to play around. Like I felt like building a formula that I was describing, that I'm buying more as it's going down more and the indicators are hitting. That was me playing around with ChatGPT and Gemini for like 5 hours over the course of multiple days, right? Like that was just a fun side project for me to research and then go out and build the own logic and like challenge it and see. Most people shouldn't be doing that stuff. Most people should just be doing what Avi was talking about, is like, I put this much in every week. I put this much in for my daughter every week. That's it. You know, up, down, sideways, whatever. You bought the same amount at 126 as you did at 85 over time. Bitcoin goes up and does what it's done in the past and what we expect it to. You're going to do well. Give it 4 years time. It's going to be worth more.
Yeah, I feel like a lot of people say this and it stays true. It's how much Bitcoin you have, right? 1 Bitcoin equals 1 Bitcoin. So like, every time you buy, even if it's at 500,000, you're buying more Bitcoin, and so as stupid as that sounds, it's the reality, right? And I think one thing when it comes to trading that I've found, and same thing with sports betting, honestly, is you zig when people zag, right? Like if the entire public is saying that Bitcoin's going to 200,000, there's people in the back room knowing that they have a ton of liquidity that can come in and they can just, wreck them. So that still exists today. Whales still like run Bitcoin more or less, right? And all these institutions, and they're speaking in back rooms. So like, that's where you can get in trouble in trading, following people on Twitter, candidly, and just like you feel that sentiment, and they're gonna go the opposite way, every time. And so like same thing with sports betting. I won't get too far into that, but like when there's a heavy favorite, every website you go to is saying like this is a lock, like go for that. Probably go the other direction, because Vegas has casinos for a reason. They've built those over time by people thinking they're smarter than they are, So
yeah, and I think Christina, who we talked to last week, had a post somewhere on X that was like, you got to make sure that the people that you're talking with or debating these things with are playing the same game as you, right? Like, let's look at the James Chanos trade where he was shorting strategy and going long Bitcoin, right? Like his time frame and the scale of the amount of capital he had to deploy was very different. And we were all saying like, he's stupid, he's wrecked, whatever it is, like, expecting the 4 year or whatever it is. Maybe in the short term he could have gotten wrecked, but like he also had different hedges on that, right? Like if strategy is going up and he gets wrecked on that, he's still got the Bitcoin behind it. So he's not losing his shirt on that stuff, right? And I'm not great with options or any of that stuff, but like to me, that's what he was trading. And if it goes down, he's making a ton of money. And what happened in the short term, it went down. We were sort of all wrong. We didn't get the 4 year playing out for whatever reason. Probably had nothing to do specifically with that trade, but he's playing a different game than I was playing or anybody else. And he didn't impact my trading or my investing or my, DCA into Bitcoin itself. But like the whole discussion, you have to make sure that the people you're following or doing things with are playing the same game as you, right? Like if somebody is trading options in Bitcoin, are they doing that to get more Bitcoin or are they doing that to get more dollars, right? Are they going to then just take that and like trade options in Tesla and then NVIDIA and like whatever the shiny object is, or is the object for them to use it to stack more sats? Those are different games that you're sort of playing, or the game theory behind that's going to be very different for individuals, and then the timeframes as well. So if you do trade and you're listening to people on the internet and they're going against your thesis or whatever it is, try to figure out what their thesis is and what game they're playing, because it may not be the same one that you are.
Yeah, I think we were talking about last night as well is, one thing that's been, I think, a little bit of a disillusionment for a lot of people this year is, understanding if you're investing in Bitcoin, if you believe in Bitcoin, if you're working in Bitcoin, that there's so much around like fixing the money that is correct, that, you're looking at the Cantillon effect and how, inflation just wrecks the long-term savings over time of any country. It doesn't even have to be that political. It's just like any, population just gets wrecked by like debasement of the currency. And when you look at whales that have held Bitcoin for a long time, they may believe those principles, but they can still make a lot of money off of selling covered calls. And then even if they sell half their stack at the top at 126, they're still very wealthy, and even if the currency continues to get debased, they're still very wealthy, so they could go into dollars and be fine. And so I think it really goes to what you're saying, Brian, of like, they're just playing a very different game where we're trying to speak to the average person, the not wealthy person, the retail person, saying, look, you need to buy assets. Printing's not going to stop. Lynn Alden, the author, she's wrote an amazing book called Broken Money. Her favorite, phrase now, past 2 years, has been, nothing stops this train. We're going to continue printing into the future forever. And so hold hard assets. So the problem is, if you're super wealthy and you already have $500 million, $100 million, selling and missing out on 50 million or 25 million isn't a huge thing. They can play, and it's just a totally different ball game than what we're doing.
Yeah. And I think that it's also, there are different groups of people who own like the ETF who need to come up with income, right? Like if you look at the sovereign wealth fund in Norway or something like that, I know that some of the, I forget which ones in the Middle East have, exposure to IBIT, but like, let's just use Norway as an example. They use that money to grow, and then they use some income off it to support things in Norway, right? So, if you're selling calls on your IBIT and you have to sell some of it, and you've also made the income there, you're probably not selling as much as you would if you just held the asset and sold the percentage of the asset that you needed to fund that year, right? Like you can make the income generation from that, but you're tending to hold down the price of the asset overall, like in doing that for everyone else. So I think that we're only going to see probably more of that in the future in various ways, whether they're holding spot Bitcoin or IBIT, as you move from, OG whales or other people who have this, $50, $100 million or even billions of dollars in Bitcoin. Sovereign funds and stuff like that, they're starting with, hundreds of millions of dollars as like dipping the toe in the water. They're not starting small. And if they have that sort of income need, this is what everybody has. I was talking to a friend, in the last week, and they're like, yeah, I'm looking to make sure that I'm using some of these derivatives off of Bitcoin to replace my income because I don't want to be working anymore, right? But I also don't want to sell my Bitcoin, right? So what's the optimal strategy tax-wise and everything else for me to do some of those things? And, not in a position to be selling calls or doing those things, I don't think, nor have the desire to do it. But like there are others who employ full-time people and teams that can, right? So I think the, financialization of Bitcoin credit, like all these things that we started, formally talking about in 2025, like I think it's really just starting off. And most people still are not looking at Bitcoin the same way that like everybody that we talk to and probably everybody that's on this, podcast right now listening to us hears about from other people that they listen to. Forget us, right? Like all the other things that you're talking about, we're still in a little bit of an echo chamber. And Ben Workman was making that point yesterday on the True North live stream that, there's so many other places out there that people get information, including on Bitcoin, that's not following the day-to-day, the price action, the same things that we're doing, right? And if we look at news and media, we know that sometimes we get very, very targeted on social media with what's in print media and everything else. So it's something else that you just got to consider the sources and do your own research at the end of the day, or try to figure out ways to make it simple for yourself, right?
Mm-hmm.
So
before we get to the next topic, I just saw a ticker that was heavy green below. I didn't see DJT. They're at it again. Did you see what happened? Up 44% today.
They got or they're combining
with TAE Technologies. So it's a publicly traded fusion company. So very, very interesting. The market seemed to like that. Up 20%, 21% pre-market. And then it just kept running.
Well, I'm looking at the green right there, and I see XYZ is also positive, where there's a lot of other red on the day. So, that's something else we should probably talk about at some point as well.
Yeah. So before we get to that, I think it is.
Who are you?
So yeah, it's a great call for us to jump in. I think for the show itself, who credit to Brian. I think he really put this in our heads of like, hey, let's do just another community show. Like we're retail investors. None of us are on the boards of any treasury company. We don't have allocation. We're not investing in pipes. We're buying off of the same brokerage accounts that anyone else listening is likely also has access to. So for this show, we want other voices to come on. Christina's been phenomenal. Adrian is beyond, a community member. He's like, almost working in the space fully now. And it's good to have a lot of variety because people do live in an echo chamber and you don't need to keep hearing, Bitcoin's going to 150 or 200 or 240 and
1 million.
1 million tomorrow. Yeah. Like if people need to know, hey, that there's.
I guess you can't see it, but it's sitting on my desk here. So
yeah, you have it there. So a little backstory. Who is Brian? I will say we didn't even know Brian to start the year. Brian wasn't a Bitcoiner to start the year. So I'm going to let you tell that story. But I met Brian actually at a MSTR True North meetup in Las Vegas in May. And it was a great time. We go in, everyone's talking about strategy. We're talking about the prefs and all the IPOs and how to value them. So it's really fun. I would definitely recommend if you are going to Strategy World in February, they are doing a True North event. So definitely go to the True North event. I think in May or whenever the big Bitcoin
is. Yeah, April this year.
Vegas. They'll probably do another happy hour. We'll definitely do a happy hour at some point. And you meet great people. So I met Brian. We were talking about Bitcoin lending and our site, 21race.com. It's kind of like NerdWallet. not many people are always bringing up lending when the sexy thing to talk about was treasury companies, but Brian was. And so we had a great conversation. We were learning from him, his recent experiences, talking to these different lenders, what was the, origination process, everything he went through. So loved his knowledge. And I was like, we got to do something together. And Brian, I want you to tell your story about how you became a Bitcoiner and why it's unique versus the average person that you meet.
Yeah. There's a lot to it, I guess. But first thing that I'll say is that it's been less than 9 months, really, that I've been a Bitcoiner. So I remember the day that I got orange pilled, and I got orange pilled hard. And basically, Saylor was on the Prof G podcast with Scott Galloway, and he was talking to him about what Strategy was doing and what Bitcoin was all about and all these things. And Scott Galloway and his podcast mate, I forget what he calls Ed, they weren't having it. And I was just like, this guy is arbitraging the dollar. Either this has got to be like the biggest fraud in the world, or I need to get involved in this. And so then I started watching more videos with Saylor. I watched a little bit of What Is Money at that time. So a whole bunch of different things from Jeff Booth. I remember I got a Larry Lepard video. This is all within like a 24-hour span. The next day I downloaded the Bitcoin Standard and basically listened to it cover to cover. So this is, March 15th, March 16th. That was a Saturday and Sunday. On Monday the 17th, I sold everything that I had that wasn't going to cause a taxable event and put it into FBTC because I trade on Fidelity. And then I put 10% sleeve into MSTR, right? So it's just sort of like getting into that ethos is you really want to have, more spot Bitcoin and everything else. I cleaned that up. And since then, I've probably, what I say is I've speed run basically like probably 3 years of Bitcoin education in the past 9 months. And so, reading a lot of books, tons of YouTube videos. Like I went hard at this to learn a lot. Hopefully, some of you have maybe watched some of our shows and our interviews in the past. Like I paid attention to a lot of the treasury companies and things like that, and tried to learn a lot more, dug into a lot of their financial statements and keeping up with X and everything. But it took some time to learn and do everything. So one of the things that came up early was I live in Gainesville, Florida, up until like Sunday. I'm actually leaving. But Strategy World was in Orlando last year in early May. And True North was having an event at Strategy World, and I'd heard about it because I was just starting to watch True North. I didn't catch it at the beginning, but a few weeks in, I'd started to watch a few episodes. And I thought about going to the event because it's like, it's like, $100. It's like 2 hours down the road. I could go after work or whatever. And I didn't sign up in time because at some point you had to buy the full pass to Strategy World to go to the True North event. And I'm just like, man, should I do this? Like, am I going to regret not doing this? And I said, it's probably stronger if I really believe in this Bitcoin stuff, then I'm going to regret not doing it. And I'm going to take a divergence because there's an important piece to why I get orange pilled so quickly, which is I knew that there was something wrong, right? Like I, don't need to go into the details, but I make a good income. I, have always a surplus and everything like that, but I constantly felt like I was getting further and further behind. And I'm investing my money, I was trying to do small cap value, do index funds and not sort of play around too much with everything. But I still felt like the more and more that I was earning and saving, and I wasn't getting ahead over time. And that's kind of the debasement. I didn't really understand that in addition to the inflation that we hear reported, that we were having the debasement and how much currency we, printed and all of the other things that we talk about that we know about kind of as Bitcoiners. And if you don't, go learn more. Lynn Alden's book, Larry Lepard's book, all these things should be required reading. But I was primed and ready to hear sort of why Bitcoin solves some of those problems, the finite, nature of it, the, decentralization, the open protocol, running your own node, which I do, the mining aspect, which I also do. All of these things are sort of important differences with other things you can put your money in, and you're basically trusting a lot of the other system, and it's manipulated, right? That other people are getting ahead more than you, but if you save, it's okay because you're getting ahead more than other people. And that's not really something to be into. So I had that thought in my mind because I'd allocated so much to Bitcoin. And before even Strategy World, I sold the taxable things that I had in my account. So I was basically all exposed to Bitcoin or MSTR at that point. And it was 90-10 at that point. And so one day, Grain of Salt got on to the podcast and was talking about, the happy hour, the event, and all the things, and you should really come. And I'm like, all right, screw it. So bought a ticket to Strategy World, bought a ticket to True North World, which I think wasn't that much or whatever it was, and went. And it was really great to both hear more about the treasury companies at the Bitcoin for Corporations event, but also just meet other people who are in this space, right? Like I remember talking to Mason and Dan at the event, a little bit with Adrian and Ben, but I talked to them more at other events that I've seen them at, over the course of this year. And then just other random people who became friends. Like I was talking to a friend right before we got on here that I didn't meet at Strategy World, but he was there, right? Like Jody, you were at Strategy World as well, right? And we did not meet because there were enough other people there to meet and talk to. And then after Strategy World, basically I'm like, all right, I need to go to more of these events because you're hearing new things. You're talking to people who are like-minded. And yeah, you can do some of that on X, but you're still in your own little bubble. Like it's good. You were talking about the meetup, at least you have a good meetup community where you are, right? And, but the more you can get into more aspects of things, you're collecting more knowledge, and that's really helpful to make sure you're doing this right. Like the first podcast I went on was in May. I was like 2 months into Bitcoin, and I went on Bram Constein's podcast, and I said, kind of something to the effect of, I'm a believer in Bitcoin, like I'm a maximalist unless something changes, right? And people were like, well, if something changes, you're not really a maximalist. You don't really completely understand it. There might be like a better investment. And I'm saying like, no, like what if somehow it becomes centralized, right? What if somehow the protocol changes and it wasn't, something that we anticipated, or there's any number of things that can happen that I think could take Bitcoin and change it from what we all think it is and what we think it's going to be. Is it likely? No. Is it non-zero? It's definitely non-zero. And so if you have new things happen, new information, and you keep your old strategy, you're probably going to fail depending on what that new information is. And so that's the only thing that I look at. Otherwise, directly long. So I went to Vegas after Strategy World. I think it was like 2 or 3 weeks later, so it wasn't even that long. That was great. I think we were both at the MetaPlanet happy hour. I met a whole bunch of people at Strategy World that I knew of on X and had some really good conversations with them. We're all talking about investments in treasury companies and, where Bitcoin's going, but you're meeting people and really understanding like who's good and who's not, right? There's also, I met Bram in person. Like I talked to him 2 weeks before, and then I could meet him in person. There's other YouTube personalities and people who are out there. They're regular people. Right? Like that's the other weird thing is like watch YouTube videos and you see all these quote unquote influencers, whether they're in the Bitcoin space or not, but like we're all humans, like we're all out there. All of the True North guys, I've talked to every single one of them to a person more than one time at various events in this past year. Right. And they're all great. So it's, everybody is available to kind of talk to if you can get in front of them. I mean, they're big events and everything like that, but I want to emphasize to anybody who's watching that hasn't been to a conference, go to a conference and maybe don't go to the Bitcoin conference in Vegas. I'm not saying it's a bad conference, but like the smaller conferences are going to give you more opportunities to talk to people. Like the Bitcoin Treasuries conference that, Bitcoin Digital Conference they're going right now, but Tim Kosman and Julene and team, they're putting one on in September. I have a friend who organizes the Canadian Bitcoin conference, which is smaller. Strategy World, would be a smaller conference to get some more alpha if you're interested in Bitcoin treasury companies. Probably even going to Prague or some of the other conferences in Europe would be good. I know it's out of the country. It's a little bit more expensive, but it's really sort of a beneficial kind of piece there. So rounding out the year, I've gone to a bunch of other conferences. I don't see it as sort of money wasted because, again, it's just deepening my knowledge and my connections within the Bitcoin community. And the way that Jody and I were talking, I used to work at a company called Wallet Hub. If you use Credit Karma or NerdWallet or anything else to get your free credit scores and stuff like that, we basically built a competitor. It's still out there. You can get it for free. I haven't worked there for, more than half a decade, but when we're doing that, I understood exactly what Jody was talking about when he was talking about what you all were building at 21 rates. And I had just different ideas and different pieces of that because I'd built out algorithms and content and those types of things in the same way in a different space before. So that's kind of how we got our start. And then we continued to talk when we were in Bitcoin Hong Kong. We were all at Bitcoin Asia, and talking to treasury company CEOs and different people there, and it's been great. So I don't know if that was too long for you guys, but that's the origin story of Brian. And continue to watch, listen, and learn every day. And I'm somewhat hopeful someday that like conviction in Bitcoin or something like that will wane, so I can stop spending so much time on it, because it's like sucking you in, and there's still so much to learn, right? Like, what about the layer 2 technology? Learning more about mining and hash rate, or how the algorithm works, right? I met a guy when I went to Bitcoin Alpha, which is Fred and Ben's conference out in Santa Monica, and he had basically, I think he like made art out of the like code for the first block of Bitcoin, and it's just like he had to like tediously go down and like write all the numbers down to make it into his art. And I'm just like, all these like numbers hashed out, and there's so much in the cryptography and everything else that there's to learn. So I complimented you guys earlier in the week because of your conversation with Adam Back that you posted, right? And it's just sort of like, that was a really great interview, because Adam said things that I'd never heard him say before on Bitcoin. And I've watched like almost everything that he's said in the last year. But there's always so much more to learn about Bitcoin, and that's what makes it so interesting and cool.
Yeah. That was fascinating, Brian. And I hate to do this right now, but I have a kid I got to go pick up. So I'll let you guys finish this up, but good stuff. I'll see you guys later.
Yeah.
Avi.
So for anything on the site, 21race.com, if it's a good idea, it's probably Brian's. If it isn't working, you can blame me. But no, what we're looking for is like more feedback like that. And I think what's really powerful is like, if I think Avi's around the same time of, I started buying Bitcoin 2017, and you get in your head of, hey, here's how I'm going to do it, and here's the companies I like, and here's the cold storage method I use. And sometimes it doesn't change, right? We talked about earlier about not trading. Well, if you're not trading, you're probably not picking up your hardware. You're not, looking at your stack every day. So I think having a fresh set of eyes is great. It's great to get that feedback and looking through, okay, what is the process? What are the fundamentals? People on the VC, venture capital land love talking about going back to first principles. It's kind of a cringy statement. It's a good statement, but like it's overused by VCs to the point where it seems cringy. But it's very much a going back to what are Bitcoin first principles. You from the content you're talking about, you weren't diving into a lot of like big crypto media, but sounds like really from, I think, really good voices. And one thing I would take away, was a good learning for people in the audience, is try to read books or audiobooks versus articles or short form content just on Twitter. Like following someone that like knows about Bitcoin on Twitter is very different than someone that sat down and wrote a full book, not using AI, especially pre-AI books. And you're a big book fan, but tell me about, that a little bit. It's like how you chose the Orange Pill book journey, what you'd recommend other people get started. I should probably write some of this down for 21 Rates, is like, how do we guide people in the right way to like, I think, long lasting stuff that is well thought out and very well packaged into like a novel or a book itself.
Yeah, so there's a few different things that I'll say, and I'm going to take the under on some of what you said, but it's supportive of what you say. You need to do your own research, and you need to know what you're not getting, and you need to recognize that. So I first heard about Bitcoin in 2011, I think. Maybe it was even 2010. And basically, it was my first year of law school. Yes, I'm a lawyer. Sorry for those of you who were there. And there was a libertarian guy in my class, and he was kind of strange. And I'll just say that. If you're watching, you probably know who you are, and you're super duper rich, because basically what he wanted to do at the time is pay me so that he could put computers in my house to mine Bitcoin, because the electric company was onto him. And to me, he and I both made significant mistakes when he asked me, and I said no. His mistake was not cutting me in and explain to me more about what he was doing in terms of the economics. Now, I'm going to say that I was probably closed-minded enough and sort of traditional enough to probably have still turned him down if he explained it to me. Mm-hmm. And then I also didn't do enough research at the time to be, why is he going to mine Bitcoin on a computer, and why would anybody do that? Like, I didn't do the research. I didn't even get curious about it. Then in 2023, I was listening to an investing podcast that I listened to, Main Street Investing and things like that. And they were saying, do you really want to go through life and not have any exposure to Bitcoin and Ethereum? If they, go to the moon and 100x, like, should you have something in there? So I bought like $100 of each, because at the time I also had basically ETF exposure to every stock in the world and every bond in the world, not tons of bonds, but just say I own everything, because that was sort of the philosophy that I was following, like sort of a little bit bogleheads with some differences. And I don't think that was a terribly good strategy. So I don't recommend that for everybody, but that worked for me. I just like saying that I owned everything. I'm not going to have FOMO for not being in this one little tiny company over here, because I own everything that's publicly traded, whether it's a bond, whether it's a stock. And I started, in addition to having those things and the Bitcoin and Ethereum, I read 3 books on Bitcoin that I thought. One was Going Infinite by the guy who wrote The Big Short, Michael Lewis. Sorry, I couldn't think of that. One was Number Go Up. And the third one was Ben McKenzie's book. He was the guy who I think was on the OC, and he wrote a book about Bitcoin.
All 3 of those Bitcoin Bear, or like, it's Bitcoin Bear, but interesting.
All 3 of those books were nonsense. So none of those books were about Bitcoin, because you didn't tell me the fundamental things that people should know about Bitcoin.
Yeah.
Finite supply. I could not tell you after reading all 3 of those books that Bitcoin had a finite supply. If it was in there, I glossed over it. I listened to him, I'll say that. Didn't know about the decentralization and why that might be powerful. And basically it lumped Bitcoin in with every other cryptocurrency. And there are significant differences and weren't, talked about, because they're basically bearish on it for whatever it is, or it was about the FTX collapse because Michael Lewis was going to write a glowing book on Sam Bankman-Fried, and now we get to write the non-glowing book because everything blew up in the time to do his interviewing and stuff like that. And again, I don't, fault the authors, because you have to be a discerning reader for yourself, but tell yourself and ask yourself, and maybe use, AI to help you afterwards. What did I learn? Are these things that I learned about Bitcoin true? We didn't really have AI that would be good to sort of play back and forth what I learned from that book. Or any of those 3. But basically, after reading those, I sold my Bitcoin and Ethereum for a tiny little profit. Again, it was $100 each. So it's like, it was in profit, but not that much. And I got out of it and I'm like, this is going to zero. Like, I took the Ben McKenzie sort of thing at face value without doing enough research or really understanding the arguments well. And so I still knew for the next year and a half, or until I sort of got into the Saylor interview with Scott Galloway, that there was something wrong, and I just couldn't put my finger on it. And that sort of kind of unlocked for me what that was. So in terms of books to read, there are lots of good ones. I think that, The Big Print is a good one. I haven't read it yet, but Natalie Brunell has a book, Bitcoin is for Everyone, that I've heard good things about, especially for people who might be newer to Bitcoin. Bitcoin 1 Million by Fred and Ben is another good one. Broken Money by Lynn is also very good, but again, it's maybe less of a Bitcoin book, but more about a book about money. You can't go wrong with the Bitcoin Standard. You can't go wrong with The Price of Tomorrow. It's probably going to depend on the person, but also if you're a Bitcoiner and you're holding this for the long term, like, that should be required reading for you over the next few years. And not everybody's a big reader, but like, you should learn more about all of those things that are in there and make sure that you know it, right? Because if you think you know more about Bitcoin than, Lynn Alden and Jeff Booth and, potentially Larry Lepard and a lot of these other authors, certainly Saifedean Ammous, like, how much time they've studied economics, traded in markets, been into gold and other things, like, you need to think why you're thinking that you're so much smarter than these other people and there's nothing to learn from them, right? And then there's, lots of other great books on Bitcoin out there, but you need to make sure at the end of whatever you're reading, you don't just take the author's word for it, right? That you test those things and say, does this resonate with me? And why does it resonate? What are the arguments? What is my thesis? Does it support the thesis that I had before? And does it support what's happening today, right? And what I'm seeing. So, I had great conviction because I, within 2 weeks of finding Bitcoin, basically put all my assets into Bitcoin. I have more conviction today than I did then. but I don't think that that's the trajectory that everybody should be on. And I don't know that the way that I did this is necessarily healthy for everyone else, right? Like, you shouldn't be spending 4 to 8 hours a day learning about Bitcoin like I was doing for the past several months. You should zoom out, touch grass, as I always think Punter Jeff is saying that, go touch grass or something like that. So anyway, long answer to your question there.
Yeah, I mean, people need to hear it, and it's also like good to hear different people's stories on like how they get there. As we're getting in on the hour, it's been a good like recap. I think it's very important for us to also wrap the 13th episode, just knowing what our perspective is, and I think just generally we need to have more content and people with perspectives around retail investors in these companies. And I think explaining to people, and Christina I think does a phenomenal job on Twitter breaking down, hey, here's this pipe investment, here's where the price they all got in, and she's not afraid to say, hey, executives are getting paid in fiat and US dollars, a lot of money, and we need to be concerned about that if the stock price is doing really poorly, and are they doing everything that they need to be doing, and are they talking to the market in the right way about their Bitcoin strategy? And if they're not, do they really command a premium? So there needs to be a lot of people that, it's less marketing for the company. I do believe we all want to like push Bitcoin forward, but you're working within a structure that's traditional finance. And anytime you're working with a multiple, it's like, Wall Street's going to come after that premium. They're going to see that as profit for them. And they're going to like either short the stock or, they're going to put out FUD, that's saying, hey, this company is not, worth, 2x MNAV, 3x MNAV of their Bitcoin holdings. So Brian, as we wrap up, what's your favorite company for 2026? What are you excited about? And what can people look forward to?
Yeah, so I think the one thing that I'll start with is my favorite sort of investment opportunity for 2026 is spot Bitcoin that I put into cold storage. So I want to emphasize that unless you know that you have enough Bitcoin, you don't have enough, and they're not really making more of it, right? There's only going to be the 21 million. We know that there's more being mined every day, every block, but that should be sort of primary if you don't have enough of that. So before we talk about treasury stocks, make sure that you feel like you have enough. And for me, I'm not putting any more money into treasury stocks at the moment, even though I think that they're probably down more than Bitcoin. In terms of my holdings and what my favorites are, it's probably hard to say because they're all sort of like, your children, and you love them for different reasons at different points in time, more or less. I'm excited about hopefully MetaPlanet and some of the things that they have cooking with their new preferred classes, and hopefully starting up some of their buys again. I'm curious to see where that goes, and I'm hopeful. So, have investment in them. I think, Strategy has built out a huge accumulation machine, and these preferreds are still like, just scratching the surface of what they could be. So, I'd put Strategy probably in the second place. And then my third and fourth place might be a little bit of a tie between Smarter Web and Capital B. I think both of those have some interesting dynamics in the way that they're going after capital, the markets that they play in. I think they both have very convicted leaders. We've met both of them in person. We've interviewed both of them, at different points in time. And so I'm curious to see where they go. And then there's, a bunch of other smaller companies that I have investments in that are out there that I'm curious to see what they do as well, right? Like a lot of people are looking at Strive and what they're doing, and more excited about, I think, SATA, their, preferred class, especially as that kind of combines with Stretch. But, for me, I'm not looking at preferred shares. I'm still stacking sats, and I have plenty of income coming through the door because I still have a job. So, those are what I'm looking at. But for me, nothing's changed in the theses in terms of why I invested in those companies. And I didn't expect to sell, at this point in time. So if the thesis hasn't played out because it's gone down, why would I sell now? If the thesis had played out, let's say that they 10x instead, like, would I be selling now? Probably not. I'd be holding them for the 100x, right? So, and you can do some modeling of your own and see where you think, different variables will go. Like if they stay at 1 MNAV forever and Bitcoin price goes, like, what does that do to your investment and the price and everything else, right? Like, I think for all of us, probably, depending when we put money in, we've accreted sats per share, which isn't something that you can sell immediately because they're denominated in dollars. But like if Bitcoin does do what a lot of people think it's predicted to do, or if they print more money, which it doesn't seem like they're going to stop doing. You look at some of the things that have happened even in the last 24 hours, not to get political about this, but like things cost money, right? And there were announcements that cost money that were very clear, new announcements that cost money. So where does that money come from with the government if we're already running a deficit here in the US? And so with that, I remain cautiously bullish, I suppose, and I'm just going to stay humble and try to stack sats as long as I can.
Yeah, gotta stay humble. I think from a portfolio update from my end, I'm still holding strategy, common stock, MSTR, MetaPlanet, much smaller position, Smarter Web Company, much smaller position. I see these as good long-term holds in case, depending on what the country does, what other options are. I do think Japan is just very interesting market. Is there going to be, people talking about like a Bank of Japan like rate hike tomorrow that they're concerned about, and so they're worried about liquidity drying up, which is bad for Bitcoin. But it's also interesting just for MetaPlanet long term, because I do think that people are going to be looking for that yield. I think if they continue to, once Bitcoin picks back up, I do think there's going to be a big market that's very interested in that one clear winner in Japan. So not financial advice on investing in any of these, but I do think it is very helpful for our audience, building trust and being very transparent of like, look, we're holding these. We didn't dump on you. A lot of these, other, not necessarily like podcasters, but we see people in the space that were very, I've seen be very vocal on MetaPlanet or be very vocal on Twitter about treasury companies, and then they go silent and they just, essentially we're like the biggest hype man, and then they sell the top, and that's fine to trade. But if you built your following, by being transparent and, getting people to follow you, you have, I think, an obligation to anyone that started following you because of that to tell them immediately, hey, the reason that you followed me has now changed, and I'm changing my position.
And I'm going to take a little bit the other side of that. And I don't think it's that those individuals don't have an obligation, but I'm the retail investor, right? Like I don't have any interest in 21 rates in terms of like, they don't pay me to be here and talk to you guys every week or anything like that. But as someone who's following anybody with your trades and everything else, people put on that DYOR, do your own research, NFA, not financial advice, right? There's a reason that they do that. And some of that is to cover their butt so that they don't get sued. But some of that is because they might be pumping bags or whatever it is, right? You look at someone like Christina, you look at someone like British that we talked to last week. I don't do enough diligence in terms of as much as what I think I should be doing, just because I'm time constrained. But I do diligence on the companies that I put money into, at least in any significant scale. And you should too, right? Like if you've never been to Edgar and read, a financial report that these companies are filing with the SEC in America, you should be doing that, right? If you don't read the MetaPlanet disclosures and get the emails about that, and you hold any of the stock, you should be doing those things. So as much as you're holding sort of those people who are pumping the stock or like, saying great things about it to a high standard, yes, and you're sort of, putting out content, and I'm maybe assisting you with that. But I think it's also incumbent on an individual to take what they're saying with a grain of salt and make sure that you validate what they're saying, right? Because, somebody's bullish prediction on something, what game are they playing, right? How much money do they have? Have they already retired, right? Is this, 1% of their Bitcoin stack that they're playing with here that they're super bullish on? That sounds like a big number. And they're already a decamillionaire or something like that, right? And you're, playing with 100% of your net worth and you get burned, right? You don't want to be doing those things. And, I think one other thing that we can take away from someone else who has a Bitcoin treasury company now is, add value, right? This is something Jack Mallers will say, like, I'm going to continue to add value. I'm going to continue to get Bitcoin, and, Bitcoin can appreciate over time. So make sure that whatever you're doing in life, you're adding value to other people, and you should be fine. And for me, I'll end with this. If I'm completely wrong about Bitcoin and these treasury companies and everything else, the alternative was I was probably going to work until I was 70, right? And retire then. I'll probably just have to do that and maybe retire with less than I would have had if I put it into the other things. But how would we ever know at the debasement, right? Like, who's going to know? I might actually have more money because I can do, more savings for a smaller amount of time and get less debased over time. But that's not happening. I believe in Bitcoin. I believe in these companies. The theses haven't changed. So yeah, maybe it's a good place for us to leave it there, Jody. Always good chatting with you, and hope the audience got something good out of this today.
Yeah, next week we'll probably record early, and then we might even just do it Tuesday, Wednesday, Treasury Talk special like timing, just because of Christmas holidays, and then we'll see you the week after to wrap out the year. So
and one thing too that I'll add, like Jody, Avi, I'm human as well, but they are human people. And so if you all have questions, if there are things you want us to talk about on this podcast, DM 21 Rates on X, or, reach out on the website and try to, tell us what that is. If there are people you want us to interview or more information you want on, treasuries, especially on this one, but certainly any of the products that, you see on the website. Definitely reach out, because I know that Jody, Avi, and Sean are really trying to build out something that's going to benefit the Bitcoin community and really retail, right? It's not meant to be, treasury companies or institutional investors. It's like everyday people like, Jody, Avi, myself, Sean, who are retail investors. So that feedback is welcome. Maybe we don't ask for it enough because we get into, the interviews and everything like that. But, that's all this conversation started, was me talking to Jody and Avi about ideas that I had for the website there. So,
yeah, I actually added that this week. 21rates.com/feedback is, we need to get, people want options calculators. We'll make them. You just let us know. We want to provide value. So everyone, have a wonderful weekend and rest of your week.
Thanks, everyone. Thanks for tuning in.